This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview. Welcome to the final Research Talks podcast here from Stockbox with Alan Green. The final of 2023, I should say. We will be back in January 24, but of course it is Friday the 22nd, the end of the week. I'll be signing off pretty much as soon as we've recorded this. Alan, I don't know, are you going to be doing the same?
I have another interview to do later on today, and one or two bits of admin. But the chap I'm interviewing is actually driving at the moment, so we're not quite sure what time. But that'll be it. That's all prepped and ready to go. Other than that, it'll be that's hopefully going to be it. I've got to go do a bit more Christmas shopping this morning.
Oh yeah.
Mrs. G has requested my presence, so that's so when you're issued a formal request in that manner, you have to comply, obviously. So
indeed,
yeah.
Okay, well, good. How has it been this year for you?
It has been a year of frustration and a year of hope at the same time.
Frustration and hope.
Yes, yeah. In terms of the portfolio, things have started to move. Some parts of the portfolio have done well. Others, I've sold out of. I got frustrated with one particular stock. I'm not going to sort of go into too much detail, but that stock has now bounced back on some news this morning, and it's good. It's good that it can recover that way, albeit it is, of course, frustrating because of course you can read certain things and make a judgment call, and sometimes you're right and sometimes you're wrong. But I think what the nature of the markets being that if you're right 51% of the time, then you will eventually make money. And certainly towards the end of the year, things started to move. We've seen some good uplift where there have been good news stories, but equally, I think this capitulation phase of the markets that we're in, I've spoken to, and I know you have too, an awful lot of chief executives that have become frustrated because every time they publish what they perceive to be excellent news, the share price maybe rises briefly, and then of course people start selling into it. So you've got this capitulation ongoing. But as the appetite improves, as the appetite for risk improves, and I mean we're seeing interest rates on hold, inflation continuing to fall, which is good, and core inflation is falling too, which is that's the real barometer. Obviously, we're seeing fuel prices start to come down a bit, but it's core inflation that really matters. And once that's under control, then you have a scenario where maybe the Bank of England can take a view, and the European Central Bank, and of course the Fed can take a view that okay, we can start to maybe bring interest rates down by 0.25%, and then you're in that downward process. And as that continues, we enter a more risk-off environment, and something that will start to stimulate stocks, stimulate the investment proposition, ideas that are out there. And of course, the underlying fundamental argument for these companies is unchanged. The fact is that particularly in the areas we tend to focus on, energy metals, battery metals, copper, lithium, uranium, silver, gold, all of these commodities are in huge demand, and the prices of those commodities are rising all the time. So at some point, we have this current disconnect in the market. At some point, that will reconnect, and I believe those that can see this through will make an awful lot of money, and it could happen very quickly if that process starts, say, in the Q1 next year. But yeah, we've been here before, Mark, and I've seen these cycles before, but I do know it can turn very quickly, and all of a sudden, 6 months into a recovery, some people are saying crisis. What crisis?
Indeed.
Everything seems to be wonderful and hunky dory.
I
But
mean,
yeah,
it's been yeah, it's been a pretty dire year generally. I think on the markets, I can't think really of anything that really gave stellar returns. We know how tough it's been. We know it's been tough for companies to either get IPOs away or raise money. It's not been a very great environment the whole year, really. I say, given the points that you made there with the cost of living and everything that really started probably, I don't know, 18 months ago when we were
mm,
talking about the upcoming energy crisis. That was, yeah, pretty much 18 months ago, I think, as we went into last winter. It wasn't as bad as I think the fear was. It doesn't seem like there's as much fear this year around that either. But yeah, given, of course, the rising interest rates, people's disposable income is less available. The banks are giving a better interest rate. A lot of people have pulled the money out of the markets, out of that risk, and gone into something that's almost guaranteed to give them 4, 5, maybe 6% a year. Not awesome returns, but at least it's guaranteed. But only in the last month, I think things have started to show signs of life. Maybe it's the old December Santa rally. I don't know, but I mean, when you've got the Dow Jones literally making all-time highs, the
mm,
Nasdaq making all-time highs, and the S&P 500 not far behind making all-time highs. It may even do it in the typical Santa rally period as we go into early
yeah,
January. I mean, that money will obviously filter down, won't it, to the smaller ones? And gosh, there are some cheap valuations out there at the moment.
there are.
Gee, I mean, Altona Rare Earths, one of my favourites, is circa. It's actually just under 2 million market cap now. I'm so tempted. I want to buy more. I'm probably going to start loading up on some Altona shares. It's 2 million market cap for a company there that's got what could be the scoping study showed that it's got a huge potential. I mean, we're talking really like an NPV of 283 million, IRR 25%, payback 2.5 years, 18 years life of mine there. Initial capex of 276 million, so a lot of money required to get it off the ground. But when you've got potential EBITDA of 1.67 billion, then it shouldn't be too hard to find funding for that sort of project. Because it's going to be giving sort of circa 15,000 tons a year of rare earth, of mixed rare earth carbonate at an average price of $13,500 per ton. So next year's all about doing further work on the metallurgy, proving up more of a resource, and going into the studies, getting into the PFS. It's getting into the
Yeah,
interesting,
yeah.
the juicy bits there. And I do like Cedric. I think he's a very smart chap. I think he he knows what he's doing. So yeah, I mean, I think that would be one of my picks probably for next year. Would be Altona. Another one that springs to mind is Arkle. Remember Arkle Resources?
Arco resource. Yep,
And I interviewed
yep.
John Teeling only I think it was earlier this week, and I actually thought, gosh, he actually presented it quite well. Where they've got like 5 projects now. They've got a new lithium one, but they've effectively got 5 active projects, and they plan to be active in the new year. And again, he expects most of the first half of next year to be all about exploration and drilling. Of course, that the zinc one next door to them, Palace Green, in the Stone Park, it's owned by Group 11.
Yep.
They raised
Yeah.
quite a lot of money recently, actually more than they wanted to. They actually increased what they were going to raise. And you've got that company there, that's a Canadian company that's sitting at 27 million Canadian market cap. And Arkle have got a huge exposure to the land on that project, and they're sitting at sort of 2 million, another 2 million market cap company. Panther Metals, another one. Is that about 2 million as well at the minute? I
Yeah,
don't
yeah,
know.
yeah. That's improved a bit. I think. I think that's nudged a bit higher. But
Is it a bit more than
yeah, yeah. Panther Metal is currently. Bear with me. I will.
3.1? Okay, so it's 1 million more
Yeah,
than.
yeah. I was going to say it's just over. It was just over 3 million because I did
Yeah.
check the share price on Panther yesterday. But indeed, I mean, Darren and the team there. They're now the Abonga Greenstone Belt. They now own the licenses to the entire that entire greenstone belt system, which is pretty exciting. I mean, we speaking to Darren at Mines and Money, he was enthused as ever, but of course I think he was very disillusioned with the markets. But I think we've seen the past few weeks, the share price in Panther has ticked up a bit, and it can change so quickly. And the perception changes, a bit of progress, and then all of a sudden, the positive news flow that you put out starts to get rewarded. I mean, another one that's now sitting at just over 4 million is, of course, 4.6 million market cap is First Class Metals, and
Yeah.
that's completely nuts. You've got 9 projects in Canada, in Ontario. You have the Zigzag Lithium project, where every single core that was assayed came out and came in with pegmatite, which of course is the core constituent for lithium carbonate. This is there was a blip in the share price the morning it was announced, and then the share price drifted back down again. And this is what I'm talking about. You have these events, you have companies making great progress, and I think on social media, First Class Metals have been probably the best out there in just showing the day-to-day progress. I mean, we've got pictures of Mark Sale, on the skidoos riding through the tundra, and it's bloody cold there. Make no mistake about it. It's very cold at this time of year, and he's out there with the team and gathering the data on this project. But of course, we've got the Sunbeam project, that historic gold mine, which the team have already done some preliminary field work. Then we have the West Pickle Lake venture with Palladium One. There's so much happening. The ESSA shear, the geological shear there that has very similar geology, if not identical geology, to the Barrick Hemlo gold mine, which is 11 clicks down the road. So that's they're on the cusp of potentially taking a quantum leap forward across any one of 5 projects, and there are also the other projects to consider as well. So certainly that's one of my picks. Here we are sitting at 5.7p. The company IPO'd at 8p. I exercise warrants higher than that too. I'm a long-term shareholder in First Class, and I'm using these opportunities to top up. And of course, they've just raised money at 6p because that was where the market said they could raise money. But I think the news flow in the first quarter of next year is going to dramatically change, and I think a lot of the companies that we're going to discuss this morning will, during the first quarter, see a big sea change in their valuations and in the perception in the marketplace. And I think the junior mining sector is set for a major renaissance.
Yeah, it's got to be, hasn't it, really? I mean, as we said earlier, that the metals prices aren't changing at all, and the money will have to filter down from the bigger indices, the bigger companies there into the juniors. And I think, who was I talking to? Oh, yeah, yesterday. They were going out this afternoon, Darren and Mike Whitlow there, Doc Holliday. They were just talking, doing a sort of a similar thing, a sort of a wrap-up of 2023. And, of course, they were both at Mines and Money, or Resourcing Tomorrow, and they were saying that, the big boys are walking around they're not looking for developers anymore, they're looking for explorers, because there's not much sort of left. And he had some very, interesting meetings with some very big players in the space, so it's all, I think it's, as I said at the start, it's certainly starting to show some green shoots.
Well, I think ECR is a classic case in point. I mean, Mike and Nick, since they came on board in September, have done a sterling job in really resetting the company, both in terms of its financial structure, and the announcement of the sale of non-core assets the other day seemed to, well, it was rewarded. I mean, the share price has certainly recovered. That's we've seen a series of higher lows since Mike and Nick came on board, and consolidation. But the sale of non-core assets, I think, has been completely missed by the market. So, of course, they raised 580,000. No commissions were paid to brokers. It was a private raise. It was done with high net worths. All of the board have agreed to the salary sacrifice scheme, which involves the board taking shares in lieu of cash with a small retainer for expenses. So, of course, all the money goes into the ground. Now, the company have had the drill rigs, the Midas drill rig, of course, from a couple of years ago, and a new Cortec rig that arrived in Melbourne early this year. That rig has now been sold. An excavator the company owns was sold at auction, and also they are looking to sell some of the land at Creswick, but they're going to do it with planning permission for a property, which of course adds a substantial premium to any land that's sold. They believe that already with those sales, they've got sales of 500,000, or 500,000 raised both from the sale of the rig and the sale of the excavator. With the property sale as well, with the planning permission, that's going to probably bring in another 500,000 Aussie dollars, which is basically what they paid for the land as a whole a couple of years ago. So that's $1 million Aussie dollars coming into the coffers during 2024. So what that means is that ECR will continue to manage and operate with the financial infrastructure and restraints it currently has. So all of that money is going to go into the ground, so the company's fully funded really for all exploration activities going forward. It won't need to come back to the market. There's no further dilution in prospect, and that's got to be a really exciting prospect for shareholders. So that in itself is going to, we've already seen the share price break higher. We're now sitting at 0.24p. It's broken out of that 2022p 0.22, 0.20, 0.22 range, and I think we're going to see it push higher, back to those highs of 0.28, possibly over 0.3, certainly in the first few weeks of 2024.
Well, there was a picture this morning, wasn't there, that went out with all the bags of RC. Well, it's not core, is it? But RC,
RC, yeah. Yeah, it's reverse circulation drilling. So you've got a big circular drill that pulls all the stuff out of the ground, and the reason that they're doing that is because that terrain has created an environment where you find nuggety gold. And there was a video actually put up by a local explorer, a fellow that just put stuff up on YouTube. He lives about 25 meters from where the Davy Road track ends, and this fellow has been up prospecting, and he pulled a nugget out of the ground on the site that the drill team are operating on at Davy Road and Cuboid Hill. So this is really exciting stuff, and I think with the RC drilling, you're pulling all of the content out of the ground from the anomalies that Adam Jones, the geo there, has identified, and obviously with those assay results, we're going to get a good picture of what's down there, and hopefully they'll strike one of those seams, and away we go.
Well, indeed, and we'll get that early in the new year, won't we? So that's definitely something to look forward to. Hopefully, kicking off the year with a bang there from ECR would be nice. They get straight stuck into things in the new year.
Yep, indeed.
Yeah, indeed. Cadence Minerals, Alan, as well. That's one of your sort of favourites, isn't it? I know for a little while, but they are definitely making some serious progress now.
Well, they are, and again, I just hark back to so Cadence, of course, have a portfolio of assets. The flagship asset is the Mapa Iron Ore project in Brazil, and it's hard to articulate the sheer scale of this thing. I mean, you interviewed Kieran, of course, a couple of weeks ago. I interviewed him earlier in the year from Santana Port, and it's a huge piece of infrastructure. You've got the mine workings, you've got a railway that runs for 130 kilometers to the port at Santana, and at Santana you have the everything's been completely refurbished, remodeled there, and of course you've got the big the port where all of the tailings are sitting, the iron ore pellets are sitting while they're ready for shipment, and some of the shipments have gone out during the year. But importantly, what Cadence have now done, because they bought, of course, the assets out of administration. It was formerly owned by Anglo-American. Anglo valued it on their books 10 years ago at 600 million US dollars. And they bought this out of administration, spent a paltry sum, and Cadence now own 33% of a mapper. So when that comes back on stream, they're going to have 33% of an asset, with the first right of refusal to go up to 49% of an asset that could be worth, I don't know, up to $1 billion. Certainly when we get the numbers back, we've progressed through the PFS, but they've now engaged TCIDR to undertake the definitive feasibility study, the DFS. And of course, that's the study that provides all of the numbers, all of the logistical infrastructure, the costs, and decides once and for all whether a mapper is going to sort of be able to progress as a profitable entity. And there's no doubt that it will, because of course the mineral resource estimate that was published last year bumped up the MRE by about 30% from the previous level. So it's a very exciting time. What it also means is that Q3 next year we will start to see the licensing fall into place, the construction will happen, and the prospects really of restarting the mine will come in probably the end of next year, early 2025. So that's hugely exciting. When the first ore comes out of the ground and is shipped by train to the port and then shipped from the port, that's going to be a massive achievement for all the team down there. But certainly Edison, the research house, valued progress, and this was before the deal was signed with TCIDR. They valued a mapper at its status back in the summer at 23 pence a share standalone. So Cadence is currently trading at 5.3 pence. That valuation also includes a 5.5% stake in the Sinovac lithium project. Another announcement out today about the Sinovac DFS, which is further progress. Of course, they have the largest stake in Evergreen Lithium in Australia. They have the assets in the Sonora Lithium project in Mexico, which of course you discussed with Kieran, and that is progressing with the Mexican government. They've hired Clifford Chance, the lawyers, to resolve that. And of course, back to Australia, they also have a stake in Hastings Technology Metals, which is the owner-operator of the Yangibana rare earth project. So the view of Edison was that with the best case scenario, with all of the assets included, we've got a valuation somewhere in the region of 50p, which is where Cadence was trading a few years back. So I think there is the potential for Cadence probably to rebound more aggressively than any other mining company with similar projects out there, simply because the valuation and the status of these projects doesn't seem to have yet been recognized. But I think the closer a mapper comes to recommissioning, then you're going to see movement in the share price.
Well, also thinking about sort of starting the new year with a bang, so to speak. Of course, the famous Premier African Minerals. This will be the third time lucky, hopefully, that everything gets into production. It's kind of that moment, I think, for Premier where how many more missed deadlines can you have? I mean, I know it was said before, do or die, but I think it definitely is at this point. I mean, if it's missed in February now, then really I think not all hope is lost, but certainly there's going to be a lot of annoyed shareholders, and I think that the reputation there will be pretty tarnished. There'd be a hell of a way to come back from that. So, last time I spoke to George, everything was on track. But of course, we have heard that before. Hopefully, this time, it is. They're spending 50,000 a day on pit development, getting into the ore, which is a lot of money. But I imagine that the pit looks very different to what I saw when I was there. If they're spending that much money a day getting into the high quality ore. It's just about getting that plant working, isn't it? I mean, they've got the ore. They've proved it can get the grade SC7, I think, wasn't it? I think one of the
Mm.
grades was even that high.
Yeah,
When it was
yeah.
hand sorted in the lab. It's just getting it to run through the actual plant properly. But as I say, apparently everything's on track. Everything will be done. So we'll be hitting the new year, catching up on what's going on there. Maybe I'll be going back out again and seeing it in the flesh, working fully for the first time. But not without risk, of course. But yeah, Prem, a very popular AIM stock. So we'll find out in the quarter one, won't we, if it's going to be good or bad news, I suppose.
Indeed. Well, I think looking at the Prem market cap at the moment, just under 60 million, and you've got that enormous piece of infrastructure. You know, we were talking about Cadence earlier on, but of course, the Prem Zulu lithium mine is a huge piece of infrastructure, and it's inevitable as you come up to the point of production that you hit these snags and you know, deadlines are missed because it's a big piece of engineering to get right, and everything's got to function smoothly. And
Indeed.
you know, often you get little cogs that come off and they've got to be stuck back on the wheel again. You know, you know, it's an inevitable teething process that the company goes through. But you know, if you look at the share price has come off, you know, those year highs of just over a penny. And here we are at 0.23p now. I mean, it's to me, you know, for something that's so close to production, it's a pretty pretty binary bet, but it's also a bit of a no-brainer.
Yeah, it's kind of priced to fail, isn't it? I mean, it obviously could go lower, but you know, it's almost at its recent lows, I think, isn't it, at the moment where it is?
Yeah,
you know?
yeah, it's at the year lows right
Yeah.
now, 0.23p. So in fact, no, it's just off 0.2p, which was the year low.
That's the year low. Yeah. Okay. Yeah. Okay. Yeah.
But I mean, they're all near as down it, and it's only going to take one piece of back on track news, and this thing is going to fly. It really is.
Yeah, I think it's just there's a lot of doubters, isn't there? A lot of doubters.
Yeah.
But anyway, yeah, as I say, Q1, it's a bit exciting, exciting start to
the
year.
It is exciting. Yeah, I mean, there are so many stocks. Well, I'm going to just reel off a couple more now. As you know, I went to see the Paris Mountain project in Anglesey, owned and run by Anglesey Mining, one of the longest stocks trading on the London market. Currently got a market cap of just over 7 million quid, trading 1.7p, so it's off the year lows of a penny. But there's an awful lot of excitement. The company has developed and been drilling in the Northern Copper Zone. There are several zones there: the Garth Daniels Zone, the Engine Room Zone, the White Rock Zone, and all of these have yielded good grades in the past. But I know Joe Battershall and the team there are particularly excited about what they're finding in the Northern Copper Zone. And I was in the core sheds, looked at the core, I put pictures up on social media, and those were taken to Ireland. They were taken literally run down the road to Holyhead onto the ferry, and those are in Ireland. We're expecting those assay results back in quarter one. I put up this morning on social media, that's going to be a seminal moment, both for the company, the management team, but also the team that are there managing the mine. It's an incredible place to go, and I'd urge anyone that lives in the area or lives nearby, if you haven't been, if you're thinking of investing in the company, go and take a look. You know, it's there. You can visit the historic mine. It's just a fantastic place. But also that market cap reflects a near 50% stake they have in the Grängesberg iron ore project in Sweden. And again, this is an iron ore project which has a PFS. It's well established. It's a similar project to Cadence in that regard, the Mapper iron ore project, and they have the first right of refusal to go to a 52% stake there and own the thing outright. So what will happen with that, we don't know. But they also have a 12% stake in Labrador iron ore mines, which are producing mines also. So we've seen this, quite a dramatic recovery in the share price, really since the end of October, early November. But there's much further to go. And I was talking with analysts at the site, and several engineers were saying to me that looking just at Paris Mountain, it should be worth 4 times where it is at present. But of course, that's just anecdotal evidence. That's just me having a chat. So don't take my word for it. But I think again, we were speaking about a mapper worth 23 pence a share. Paris Mountain alone is probably worth, possibly 6, 7 pence a share. Then you've got Grangersburg and the Labrador iron ore mines on top of that. So, it's going to be a really exciting quarter 1 anyway for Anglesey next year. So looking forward to that.
Yeah, like a little homegrown project there, perhaps as well. Always nice, isn't it, for the UK investors?
Well, it is, and of course, Mark, we were saying at the show, at the show, we had and we saw the. I was talking to Cornish Lithium there, and the support that they've got from the UK Infrastructure Bank and the government. Very keen to develop these domestic projects now, and I think Paris Mountain falls right into that category. It was a dormant mine like South Crofty, which is now fully permitted, up and running, and Paris Mountain, I think, will be the next on that list.
All right, excellent, good stuff. Okay, well, I mean, there's another companies that I'm sort of interested in as well. Of course, it's the Jason Brewer sort of et al. I call them. You've got, of course, Marula Mining, Shuka, which recently listed, and of course Neo Energy Metals as well, which he's involved with on the periphery. But Sean Heathcote there is the main CEO listed. Well, I was at the stock exchange for the IPO, and of course these are all part of the Quinton van der Burgh group, isn't it? The mining billionaire who I interviewed. My Elon Musk moment, serial entrepreneur there who, wants to build something very, very significant. And I was just talking to him earlier in the week, and I think next year is going to be exceptionally busy for that group. They want to get going there properly at Marula, get into production early in the new year, get a few mini pits, as he calls them, into operation there, and sort of be producing sort of circa 10,000 tons of spodumene a year on the Blesberg asset there. I know they'll be drilling to get into some of the hard rock to see actually what ore is there and where they might start opening up some of these pits. The kit's been arriving, the ore sorting, they've got a lot of stockpile there that's going to be running through. And Jason I spoke to earlier in the week, and those XRTs are being optimised at the moment, being sort of run up at the moment. And of course you've got the Canusi project as well, the copper project, a lot of low-hanging fruit there. Apparently, again, a busy Q1, according to Quinton there. And then the uranium project, Neo Energy Metals. That's setting up to have potentially, I think it's a 5 million resource at the moment that's defined, and they've got a target of 20 million tons, and apparently they want to be producing uranium by the end of the year. So this year is going to be really about finding out how they can do that. So it is, early stage, I suppose, but not completely grassroots. But regardless, it's going to be a busy year for them, for sure.
If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter, and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stopboxmedia.com. Thank you for watching.
Or the green economy. I think that whole group of Marula, Shuka, Neo Energy Metals, definitely not going to be a boring year for those guys. I'm sure they'll be on Stopbox an awful lot. Hoping to get out to the Indaba, but it's highly unlikely given a personal situation with a child that is due middle of February. But I would like to go to the Indaba because I know the QGC group and Jason, they're going to have a very big presence there and really start getting out and telling their story. So I think that story is really just getting started. And fair play to Mr. Brewer. He does what he says he's doing, doesn't he? He's on a lot, and he's effectively doing what he says he's doing.
He does indeed. He certainly puts himself about Jason, and investors and shareholders know where they are, with their investments literally every day, because Jason communicates that regularly.
Indeed, yeah, indeed.
Yeah. So just following on from mining projects in Africa again. Of course, we spoke about Altona earlier. I want to highlight Sovereign Metals as well, which has had a steady year, I think, in terms of share price performance, but currently got a market capitalization of 256 million Australian dollars, which equates to about 138 million pounds sterling. But Sovereign Metals, of course, the owners and operators of the Cassia rutile and graphite project in Malawi. And of course, Malawi is known as the warm heart of Africa. But I think it's, we're talking about grasping the scale of some of these projects. This is bigger than anything. It's bigger than anything we're going to talk about today in terms of its size. 280 square kilometers is the currently known mineralized area. And rutile, of course, it's the commodity that creates titanium dioxide and titanium. And of course, titanium has a multitude of uses in aerospace. It's the brilliant white paint that you buy at your DIY store, used in optics, also used in welding as well. They have a memorandum of understanding with Haskell, the world's largest welding company. But it's, as the company says in its presentation, it's a once in a generation discovery. 17.9 million tons. That's the world's largest known rutile or titanium deposit, and 24.4 million tons of graphite. And it's poised to be the world's largest and lowest cost producer of graphite. 25 years initial modeled mine life, and operating costs of $404 per ton. Now, if you operated the mine at Cassia for 25 years, you would only mine 30% of the currently known area of mineralization. So this isn't a once in a generation thing. It's a multi-generational asset, which is absolutely huge. And I think to get some idea of the scale of this thing, the Malawian president stood up and gave a speech to the UN General Assembly late last year. And he featured Cassia in his presentation, just outlining the scale, what it's going to do for Malawi as a country, what it's going to do for the community of Lilongwe, which is close to where the asset is based. And of course, shortly after that, Rio Tinto came in, recognizing the potential, invested $40 million. And I think, it's highly likely, I would imagine, that at some point Rio will make a bid for the remaining shares it doesn't own, and will come in and own it outright. But even if that doesn't happen, where the project is now, it's just taken huge strides forward. So the pre-feasibility study has been completed. The post-tax net present value stands at 1.6 billion, and this is alongside the development rutile story, alongside the fact that just 25, just 30% of the known mineralization will be mined over that time, and that's versus a market capitalization of 1.36 million at present. So it gives you some idea of the scale of the disparity there. As this develops, as we get towards DFS, and the DFS is commissioned, and obviously that'll be in conjunction with Rio, then we're going to see that valuation gap close rapidly. And Mark, I know you spoke to Sapan Guy, who's of course the head of commercials for the company, the head of commercial development. He's instrumental, Sapan, in bringing Rio to the table. So it's a huge step for the company, but nonetheless, we're still right at the bottom of that mountain decline in terms of valuation. And I think next year is going to be a seminal year for the company. And this is a 10 or 20 bagger for me all day long.
Well, yeah, the world's biggest rutile find, isn't it?
It is, yeah. It's vast. Just again. So if you go through the DFS, you operate that mine for 25 years. On the current estimate and the current proposed structure, you'd only mine 30% of the known mineralization, and that's the currently known mineralization. So they could well find more. It's just vast and multi-generation.
Yeah, it's pretty significant to say the least. Yeah.
Yeah. So also in Africa, I just want to touch on another company that has also taken huge strides forward this year, Glencoe Resources. Of course, again, it's had if you look at the share price chart, we're seeing a slow climb. So if we go back to, we've seen 3 higher lows so far this year. 3.95p in April, 4.25p in September, and we're currently at 4.6p right now. So I think we've got those three higher lows. And if we break above from here, then I think we're going to push back to year highs of 6.5p and beyond. This company's got a market cap of just under 10 million, but it's also just secured a grant, an undiluted grant from the US government to develop the project and develop the DFS. And of course, this is it's a graphite project. It's the Cross Graphite project. Again, a huge area is being developed. This is jumbo graphite, and you could literally take a tractor and hoe and rake the stuff out of the ground. But it's gone through the stage where the Ugandan Ministry of Mining has given the all clear for Chinese partners to take the graphite and test it. And we're moving to a stage now where we're going to be progressing the DFS. And again, I think we're going to see a seminal year ahead for Blencow. So full steam ahead there.
Yeah, Blencow's a good one, isn't it? Yeah, and they've made quite a lot of progress, haven't they, in the last year? I know you talked to Mike Ralston quite a bit.
Mike's a really grounded guy. He's very sensible, very pragmatic. He doesn't get carried away and on the back of these deals. But I mean, securing that funding from the US government was, in my opinion, a seminal step for the company. And of course, it was rewarded at the time, but the share price has drifted back a bit since then. But I think once we get news flow going into the new year, we're going to see some big movement from this company and the share price. And I think Mike is he's very highly regarded in the mining industry, and I think he's the perfect guy to head Blencow up as it brings the Cross project to fruition. Excellent,
great. Okay, any more picks for you, Alan, for next year?
Yes, indeed. Cool. Just so this is diverting away from mining now for the first time, but I want to mention Burgh Pharmaceuticals.
Oh yeah.
POLB is the EPIC code. And again, you look at the chart, it's had a good year. So we started the year, at real lows around 6p. We've seen the shares return to that. Certainly, they were back down to 6.5p during the early part of November. And then you'll see that big bounce. And there was a good reason for that bounce. The company is currently developing a number of assets. POLB 001 is its principal asset. It's ready for phase 2, and this is developing cancer immunotherapies and treatment for severe influenza using oral encapsulation technology. Also targeting obesity with oral GLP-1R, and that is expected to enter clinics in 2024. Also working with a company called Cytoreason 13 Biotech, and both of those partnerships are using AI-led discovery programs to develop and bring the projects forward. Now, the management team there are well known. Of course, Carl Friel, a well-known entrepreneur and chairman both of Burgh and also of hVivo. Jeremy Skillington is the CEO of Burgh, and Jeremy has a great track record. He worked with a company called Inflazome, developed that business several years back, and they sold it to Roche Pharmaceuticals for $450 million. And that's very much the plan with Burgh too. But the reason we saw that big jump in the share price is because the company employed three of the team from Amryt Pharmaceuticals. And of course, that team was directly responsible for taking Amryt Pharma from a 50 million market cap in 2016 to a $1.48 billion exit in 2023. And they are looking to repeat this with Burgh. As we stand at present, the company's got a strong cash position, 14 million in the bank. And they're at the point where they're pivoting to revenue generation and cash flow. They presented POLB 001 data at the ASH conference. That's the American Society of Hematology in San Diego, and also the work that the team have done on RSV. that has there was an update on the development of that, and a very positive set of data was released from that back a week or so ago. So Burgh is really set for a great 2024. We're trading now close to year highs at 9.49p. That gives the company a market capitalization of 46.8 million. But I think a company like this, if it were on the Nasdaq, we've heard about the Amrit Pharma took it from a 50 million pound company, $1.48 billion exit in 2023. That was in 7 years. So with that team on board now, there's a very strong prospect that the same could happen to Burgh in the coming years.
Yeah, indeed. And just thinking on tech there, Alan, of course, Ondo InsurTech as well. They've had a very good year, haven't they, considering they haven't really even been listed full 12 months yet. But they've certainly moved things on quite rapidly there. And I think next year it's only going to be, it's more of the same, that's what Craig Foster told me, more of the same, more significant contract wins and building that value, getting the revenue in the door. So that's a good tech company. It's worth about 20 million. So, it's a bit more than some of those miners we were talking about to begin with. But, for a tech company in the insurance industry that's going into the United States, 20 million may as well be 2 million.
Yeah, exactly. But I mean, Craig Foster and his team have done a sterling job. And of course, this is now the go-to, the LeakBot app and devices, the go-to app. Companies or insurance companies that use this are saving millions, if not billions of dollars every year. And it's now in use across Europe and Scandinavia, in the US, of course, in Australia too. And it's gradually being rolled out. So Craig and his team have done a really sterling job in doing that.
Yeah.
And it's a really binary opportunity, because the more companies that use it, the more companies will take it up, because the companies that are using it will have competitive advantage over the companies that don't, because they'll be saving millions of dollars every year. So in a sense, it's almost it's now selling itself, because the insurance companies that want to cut costs and save money, this is a one-stop shop move for them to be able to do that.
Yeah, indeed. Well, no, thank you, Alan. That's an extended research talks that we've done this week. But, we've covered a lot, haven't we? And I think there's a few things there to consider for next year. And hopefully, it's better than this year. Can't be worse, can it? Surely.
It can't be worse.
Yeah.
Yeah. So someone said, smile, things could be worse. So I smiled, and behold, things did become worse. But no, I'm sure it's going to be a much stronger year. And I think you just have to look at the global economy, where we're poised. Of course, there are always threats to that. We've got the ongoing Ukraine war. We've got the crisis in the dreadful events in Gaza and Israel that, of course, we're seeing every day on the news. But of course, these factors will have some bearing on the global economy. But I think what we're seeing is that the environment that's created has now been absorbed into the economy. It's being met through action through the central banks, and indeed, as you said earlier, Mark, we're seeing some of the indices pushing those all-time highs. So the FTSE has always lagged the US indices in a sense, but I think we should be set for a strong resurgence next year.
Excellent. Well, thank you, Alan. So I wish you a very Merry Christmas, Happy Holidays, enjoy the break.
Thank you, Mark, and a very Merry Christmas and a peaceful and prosperous New Year to you and to your wife, and also to your soon-to-be youngster that will be arriving in the Fairbairn household in the not-too-distant future. So every success and best wishes for 2000.
Indeed, yeah. Someone said yesterday it was Darren Hazelwood, actually. It's my last Christmas not being a dad. Yeah, it's not a parent, which is like, oh, yeah. It's going to be very different going forward.
I can assure you it will be very different now for the rest of your life.
Looking forward to it.
And that's in a good way too, believe me.
Yeah. Thanks, Alan. See you later.
Cheers, Mark.